Yeah, so the dates that I'm looking at are January 8th to January 10th. That's when I think we'll see these approval orders.
Did you know that Bitcoin has skyrocketed from mere cents to thousands of dollars in just a decade, making it one of the most unpredictable yet exciting assets in the financial world? But hold on to your hats, because things are about to get even wilder. We're now having the buzz around BlackRock's Bitcoin ETF, and it's expected to launch in 2024. So, in today's video, we'll explore how this could be a pivotal moment for crypto, turning skepticism into widespread acceptance. This move has implications for everyone, from Wall Street to Main Street, from cautious investors to crypto enthusiasts. But here's the million-dollar question. Will BlackRock's bold step be the catalyst that skyrockets crypto into uncharted territories? Or will it be just another blip in the volatile journey of digital currencies? Let's find out. Bitcoin, the trailblazing cryptocurrency, embarked on an astounding rally in 2023. Starting the year just above $16,000, it skyrocketed to an eye-popping $45,000 by early December. It's not just numbers we're talking about. Bitcoin's sprint has left even global stocks and gold in dust. And no wonder companies like BlackRock want to step in with the ETF idea. Think of an ETF as a basket of goodies. In this case, of a Bitcoin ETF. This basket is chock full of assets linked to Bitcoin. It's like a bridge connecting traditional investment with the exhilarating world of cryptocurrencies. Investors buy shares of this ETF on the stock market, and these funds are used to build a portfolio mirroring a market index or a specific sector. But unlike mutual funds, which are a bit like the homebodies of the investment world, Bitcoin ETFs are the adventurers traded directly on the stock exchange. The plot thickens as we consider the stance of the Securities and Exchange Commission. They're still weighing the idea of approving ETFs that own Bitcoin directly. Imagine the potential. With a Bitcoin supply cut on the horizon in 2024 and a growing appetite for ETFs, we could be looking at record-breaking highs. So, who are the ones to make this happen? Companies like BlackRock and Fidelity are stepping into the arena with their applications for spot Bitcoin exchange-traded funds. This move marks a pivotal moment in the cryptocurrency landscape, signaling a transformation that could reshape how we look at digital assets. Let's rewind to November 2023, when BlackRock, a titan in the asset management world, made a bold move. They filed for a spot at Ethereum ETF. This wasn't just a routine filing, but a clear signal of BlackRock's growing commitment to the cryptocurrency market. Think about it. A financial behemoth like BlackRock diving headfirst into the crypto pool. That's a vote of confidence in the market's potential. But BlackRock didn't stop there. In a world where cryptocurrencies are rapidly gaining prominence, BlackRock's recent document sheds light on the nuanced risks within this digital domain, particularly highlighting the role of stablecoins like Tether USD and Circle USD. Despite not investing in these digital assets directly, BlackRock acknowledges their ripple effect on Bitcoin and the broader digital asset markets. Stablecoins, designed to be the digital world's anchor, aim to maintain a stable market value, but their stability is not always a given. BlackRock highlights the volatility of stablecoins, which, believe it or not, can sway Bitcoin's price. This correlation is a crucial piece of the puzzle for investors eyeing the proposed spot ETF. It's a delicate dance where the performance of one can impact the other. The document doesn't just skim the surface, it dives deep into historical events and regulatory actions that have raised eyebrows about the trustworthiness of stablecoins. Remember the 2021 agreement between Tether's operators and the New York Attorney General, resulting in penalties for misleading asset backing statements? Or the hefty $42.5 million fine Tether settled with the Commodity Futures Trading Commission? These events aren't just footnotes, they're critical chapters in the story of stablecoins. BlackRock also spotlighted Circle's USDC and its ties to the U.S. banking system. Case in point, the March 2023 DPEG event, where USDC briefly dropped below the $1 mark. This incident is a stark reminder of these digital tokens' fragility and susceptibility to disruptions in the traditional banking sector. It underscores the symbiotic relationship between digital assets and conventional financial systems, and how tremors in one can send shockwaves through the other. For those looking at the Bitcoin ETF, BlackRock's insights are more than just food for thought. They're a crucial guide to navigating the potential risks in this investment. Their analysis of stablecoin volatility and its impact on Bitcoin offers a lens through which to view the complex dynamics of this digital asset market. As the cryptocurrency landscape evolves, BlackRock's focus on these risks is not only timely but vital. It serves as a crucial reminder for investors and regulators alike. In the digital asset sector, due diligence and a keen awareness of the interconnected nature of these assets are essential. As the ETF awaits the SEC's review, the conversation around stablecoin risks remains a central consideration for all stakeholders involved. And let's not forget the other players in this race. Fresh from a landmark legal win against the SEC, Grayscale Investments is also eyeing a spot at Ethereum ETF. With the SEC extending its decision-making timeline to January 2024, the stage is set for an intense competition. BlackRock, Fidelity, and several other top investment houses are all jostling for a leading position in this unfolding crypto saga. But the applications haven't been approved yet because of some issues. So here's the deal. The SEC, that big regulator in the sky for all things finance, wants Bitcoin ETFs to work in a particular way. Typically, ETFs use what's called in-kind transfers. Think of it like swapping baseball cards. You give me this, I give you that. All nice and straightforward. But with Bitcoin ETFs, the SEC says, nope, we want cash redemptions instead. This is like saying, instead of trading cards, you've got to sell your card and give me the cash. Now, why does this matter? Well, converting Bitcoin into cash and back again can be pricey. It's not like flipping a switch, there are costs involved. This means that the Bitcoin ETFs might become a bit more expensive for investors. And who likes extra costs? Enter the heavyweights, Fidelity and BlackRock. They've knocked on the SEC's door asking, hey, can we do both cash and in-kind redemptions? But the SEC's stance is a bit of a head-scratcher for many. They seem pretty set on this cash redemption thing, and the reasoning behind it isn't crystal clear. The issue here is about how these ETFs give back your investment when you want out. BlackRock and others like ARK are big fans of in-kind redemption. This is where you get Bitcoin back for your ETF shares. It's pretty tax efficient and straightforward. But the SEC is leaning towards cash redemption, where you sell your shares and get cash instead. Their thinking is probably to avoid the complexities of dealing with Bitcoin directly, especially for broker-dealers. Now, BlackRock is trying to play ball with the SEC's concerns about market manipulation and liquidity in the Bitcoin market. They're tweaking their Bitcoin ETF, adding a cash create redemption mechanism. This means that you can get cash instead of Bitcoin when you redeem shares. BlackRock's new plan, detailed in their revised S-1 filing for a spot Bitcoin ETF, puts the SEC's preferred cash model at the forefront, keeping the in-kind option as a backup. So, when should we expect the approvals? Well, the crypto world is abuzz with the latest rumor mill churning out some exciting news. A Bitcoin ETF might just get the green light as soon as January 10th. This whisper has sparked a frenzy, propelling Bitcoin's value upwards of $42,000. But that's not all. The big guns like BlackRock, Grayscale, and Fidelity are in the thick of it, discussing the nitty-gritty of spot Bitcoin ETFs with the SEC. This move is like a beacon of hope, signaling that approval might be approaching. Now, let's navigate the slightly murky waters of what this means for the everyday cryptocurrency investor, the overall market prices, and the world of public policy and regulation. Industry insiders see the entry of these financial giants into the crypto space as a massive thumbs up for cryptocurrencies in the short term. Experts sum it up pretty well. Companies like BlackRock aren't just joining the crypto party for the fun of it. They see a golden opportunity for growth and are keen to be the first movers, leveraging their hefty presence in the financial industry to shape the future of crypto. The move by BlackRock into Ethereum ETFs is particularly noteworthy. It's like we're witnessing a new chapter in the evolution of the crypto industry. As another expert points out, this is a sign that cryptocurrencies are moving into the mainstream as an asset class, getting a nod of approval from the big players who manage serious capital. So, who's set to win big and take on the most risk with BlackRock's proposal for a spot Ethereum ETF? The consensus among crypto experts is that BlackRock's move could significantly drive the market forward. By opting for spot crypto ETFs instead of futures, they're sending a clear message. Cryptocurrencies are now a mature investment option. If BlackRock or Fidelity's ETFs hit the market, we could see a tidal wave of new capital pouring in, potentially sending prices soaring. Conversely, we can expect a spike in major cryptocurrency prices in the short term, with a sustained increase in the long run, especially for big players like BTC and ETH. This influx of value might also positively impact other cryptocurrencies. Moreover, with BlackRock in the mix, the trust factor in the crypto market could see a significant boost, which is crucial for mass adoption. Retail investors play a key role here, as their confidence in the market is essential for its growth and stability. Should the SEC give the green light, BlackRock's ETF model would herald a big shift for banks, letting them get in on Bitcoin without direct involvement. It's a major pivot in how traditional finance views Bitcoin, potentially paving the way for fresh investment paths. As we wrap up, one question remains. Will BlackRock's venture into Bitcoin ETFs be the dawn of a new era for cryptocurrencies? Or is this just the beginning of another twist in the ever-evolving tale of digital money? Let us know your thoughts, and thanks for watching.